Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome to another excellent edition of the Power Trading Hour, where we come together, I can't even say it today, where we come together at the appointed and sacred time.
The following takes place between 2 p.m. and 3 p.m.
And, well, that's pretty much it. We're an exciting day. Already have some questions. We'll get to it. Of course, the midterm elections are tomorrow. They may stretch into 2 weeks for some states in the Senate, which could have a runoff if they don't get 50%. But I don't think it's probably going to matter to the market much. I think by Wednesday morning, we're going to have a fairly good idea. The market's going to trade on that. Could you get some overnight stuff? If you get a big surprise, you could. I'm not expecting it. Nor are the market makers in the options market. They're kind of thinking rather flat, especially today and tomorrow. So we'll see about that. But, we've got, they're up 20 points on the S&P cash, 19. I'm kind of thinking that by the end of the day, we probably go back to flat. There's just not a lot of juice. Probably get some people that want to short the market. Probably the same thing tomorrow. There just doesn't seem to be a lot of desire to push it before the election, and probably on Wednesday when we go delta neutral. Volume was very good. We almost hit 14 billion shares on Friday, and that's going to tell you that we are building steam to either go and break out of the lower consolidation range that we're at now, or take a big jump and, as they say, break through ice. And tell you the truth, it's kind of hard to actually see a clear outcome. But my guess is that we're probably going to get I can't even say it, a good idea about that on Wednesday. Now, Friday, the bond market is closed, and that happens twice a year when the equity markets are open and the bond markets are closed. It's more likely that the equity markets are closed and the bond markets are open throughout the year. But, of course, the bond market's about 10 times in dollar amount bigger than the equity market. So you get two things. Either you get a lot of nothing, or you get some huge moves why no one has access to the bond market. So I'm looking, as I said, during the 2 p.m. update, for maybe some chicanery, some skullduggery, maybe a hootenanny. Got to use a lot of words that I don't normally get to use in daily conversation for Friday. But the way this is all set up, we could have some very volatile markets, I think, after we get the initial reactions on Wednesday and Thursday. I think that sets us up for a big move on light volume on Friday. And that may be to wash everybody out at the bottom or to run all the shorts at the top. But I think this is really kind of the last hurrah before we go into what I think, at least today, is going to be a slow stumble up higher into the end of the year. Question first in the den is, the XLU wheat looks weak today. So we'll take a look at it here. I can find my charts. We'll bring that up. Okay. It pretty much did what you should think it is doing, i.e. it came back up and filled, or at least tried to fill the gap from the 5th of October down. That was 17.2 million shares down. You actually got into it with decent volume. I think, especially in light of comments overnight from the president, that is a tough road to hoe. What do you do if I don't know exactly the legality of it, but if he truly does shut down or use the power of the presidency to shut down coal plants, what does that do for utilities? I'm kind of thinking that maybe that power doesn't actually exist, but no one wants to hear that, and the reaction, I think, is to sell off a bit anyway. But if you're a utility and you got to build a new, at least maybe natural gas plant, that could take 5 to 10 years worth of profits off the table, and I think there's a little bit of that in the XLU. Although I'm not exactly sure that the comments weren't really tailored to the big environmental hootenanny that's going on in Egypt right now. And I can make comments on that, but I will defer those. It's just probably too easy, low-hanging fruit to make fun of those folks. But certainly not a lot of volume in the XLU, at least so far today. But maybe by the end of the week, we're probably going to find out whether that's, even though with the vast power of the executive branch, whether that is a possible thing. I think people just nervous about it at the moment. But certainly, we're not going to have any new drilling. The idea that we put the coal plants out of business could drastically affect the utilities and cost them a huge amount of money, and that's probably the knee-jerk reaction. My guess is that we'll see whether or not on Friday we have the same kind of rhetoric from the executive that we have today. So maybe transitory in using a language and a word that was been out there for a while. 877-927-6648. To the question, are you quantum computing names trading on the house going red and more tech military spending the cause for the pop and quantum names? I think the pop and the quantum names, what is it? ARQ, yeah. Okay, we'll get back to that. Anytime you start getting government contracts, where is that? ARQQ. You start, especially in massively shorted sectors, you're going to have moves like Arquit Quantum, and the British government did give a contract to ARQQ. Massively shorted. We're a little off the highs here today. But any kind of news that makes these guys not go out of business means that you're probably going to have some huge short covering. We'll be back in a minute.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And as we come back, I had a question about where would you take prices for MGNX, which is macrogenics. So many right now of these stocks are coming in and filling the gap about halfway. So the question here, can the D-leg extend past 695? My thought is this is going to probably come and try to fill about half of this gap down. And this gap had a lot of volume. From May 4th down on 3 million shares. But generally what you're going to do is get something in the probably $7 to maybe $7.20 range. And it may just be there for a second, but you're going to come up, or at least the pattern that almost everything else is hitting now on bounces is you come up into this gap about halfway on lighter volume. Today you got 1.1 or 1.2. So you're certainly getting into this resistance level on a lighter volume. My guess is that you'll probably have some people short in this. Let's see if I can find out. To take a quick look, see what we do have. MG Index. You got some decent. You got 10 days to cover. Wow. Okay. You got one nice day and a little bit of volume. We're starting to see a few of these stocks out here that are massively shorted. Let's see. Have some bounces and pull back. One of the other ones that's like this, I was talking to one of the guys in the den about Sava. It's got some fairly massive short interest. And you just wonder when this thing actually, when they light the candle on it. I have no idea the underlying value of the company. I'm just saying as a setup, and maybe if you want to buy it intraday, it started to try to run today, and I think some people were selling out of it. What'd you have on that one? 37.30 is a high. You got a lot here that are set up. And you get the right condition, and you got 10 days to cover. Generally, I look for just something that shows that the shorts are been run out of the stock. And, maybe that happens on Wednesday, as I said, a delta neutral day. Maybe you get some kind of wide ranging day. My guess is that I'd want to sit on my hands on this until I saw some big candle, and that candle could be $1 on this one with 10 days to cover. You may even get more than that. I would just say on a normal day, $7.20. On a good day where you get the shorts going, $7.70 would be beyond the scope of what you should see, right back up to resistance. Let's take a little bit bigger look on that on the backside. You could get, with 10 days to cover, you got like 1 million shares a day. You might get something even bigger. I wouldn't want to be short the stock, let me put it that way. So I would any big move, whatever the big move is, sell it. It's going to pop more than likely. At a minimum, 720. You may even get a whole lot more. But if you get that and it's running and it's running and it's running, as I like to say, sell when you can, not when you have to. Okay, what else do we have out here that we're looking at? Okay, that's the S&P 500. Let's go back to my default list and take a look. I know I have another list of stocks I wanted to get to. After the bell tonight, MOS. And anybody in the den, certainly you can bring their question in. I also have another question. Okay. Mosaic, after the bell tonight, you got a nice gap lower already. I'm just looking at this, suspecting that you've kind of got the first test on this gap down with 8 million shares into 6.7, the September 26 low. I wouldn't want to be long this until it retests 46.49, and hopefully on lighter volume if you are in this. It's hard to think that anything in that sector would be much lower. But let's see here. Now, interestingly enough, my race partner through 1999 through 2004, his wife worked for this company, so I know a great deal about it. They are based in Tampa, by the way. And she was quite the wheeler dealer, and really, wasn't, it was just kind of like a secretary, made it up the food chain to making $500 million deals and everything. And I always thought it was fairly interesting, but whoever trained her good. She made all the deals. But I'd still want to see that lower test. And I don't know if that's on just the entire world economy looking lower, but you need a retest of that previous low. Got another question here today. GNRC. GNRC. And of course, this one's been pulling back for a while, and this has been on reduced new home sales. They've been making a great deal of money by putting in the backup power supplies. I own one, and certainly a lot of other people do. But since housing prices are down, the thought of that. Now, one of the other things is apparently they really didn't shut the spigot off on new manufacturing. So they got a lot of equipment. And, if you're in their shoes, you're probably hoping you get a hurricane and knowing you shouldn't. But I don't see anything out here that says that the biggest problem they have is not the inventory they already have. But that is problematic. Okay. Is there anything else here? I don't think so. There's no signal yet. I'd watch it. If you could get a close back above the 3x3, then maybe you got some game. But I know Nicole is building steam in the Gulf, but I don't see anything that changes that. When it does find some low, or if it did, again, a lot of these gaps, huge gaps, get tended to fill about halfway, and that's where they fail. So you've got maybe $130 in this when it decides to turn around, but I don't see anything that says it's ready to turn around now. Well, we're going to the break here now. Hang on, we'll be back. I got a lot of stuff to look at today. And maybe give me a call, 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And we're back looking at Planeteer, PLTR. Well, you got too much volume today, and you've already broken through the lows of the IPO. You need to get to $6.44. You got about the same volume of energy on the way up and the way down. I'm going to say I'd want to see $6.44 tested in this. Now, maybe that changes something, but I don't see a lot out here that would make my change my mind. Again, we're probably going to have a huge, wide-ranging day on Wednesday. Somebody brought up in the den, Tiger's Den, that we've got CPI coming. I'm not sure that this one's going to have a lot of surprises in it. Maybe the next one or the one after that. But, weirder things can happen. That, of course, will be after the election. You never know whether or not, some of the bad news has been put off a little bit. No one in the government has ever fiddled with the numbers. We know that. And on both sides, before anybody gets mad at me. But certainly, we've got that. But I'm thinking that maybe Friday, with the bond market being closed, is more than likely a big day for the market. So we'll see. Back, a question to look at the usual suspects, and that is AMD up 1%. This looks to me like you're getting back up into that about $66 range, which is about halfway through the big gap down on the 7th. Generally, even in bull or bear markets, you're going to come out in the first time, you try to fill about half of the existing gap, and then maybe go back, retest the lows, and then you're ready to move. But you can still see some higher. Probably the most interesting thing over the weekend in VDA was Advanced Micro's launching their new video cards. They're using the chiplet technology that helped them get ahead of Intel to lower the cost of their video cards. And the idea behind this is, comparable to the CPUs. They decided to start making the cores of the CPUs, or the main processor chip, individually, where Intel always put them all on one chip, and sometimes would just delete the chip depending on whether it worked well or not. And this is a technology where they make the chips individually and then put them on a bigger substrate later. And that way they can just make sure that some work better than others, some of them work at higher frequencies, so they can mix and match and bend them to get the most amount of money out of it. It was a pretty good idea, especially in the CPU business. Now they're trying that in the GPU, or graphics processing unit business, which is video cards if you live in Lutz. But not a bad idea. I don't know, especially since those cards and the reviews hit on Friday after trading. Doesn't seem like really much happened on Friday or today on that, so I don't see much in the way of movement. On NVIDIA, you've got kind of the same pattern, and you're almost there. NVIDIA only probably has a couple more bucks to go in and finish this gap down that goes back to partly on September 1st, and then you had kind of about half that again on the 12th of September. But the high of the day, that day was 145.47. That's kind of probably where I think this thing is looking at right now. So you may not only have a buck or two higher than that. So if I was long, I'd be thinking about cashing in my chips unless we get the entire market moving. And actually, it's a little stronger than I thought today. 36.86. Maybe everybody's looking ahead of the elections, but I don't know. Okay, back to the usual suspects. Apple. Of course, you had huge volume into the previous low, October 13th, 134.15 with 113 million shares. You went into that with 141 million shares on Friday. Today, you're just kind of going sideways. You at least need some kind of consolidation and move there. The high energy on the way down for a variety of reasons. They've reduced some of their suppliers' orders, and of course that's filtered through the market. They also have some issues on whether or not they're going to be able to sell units in China, although China continues to talk a great deal about reopening, and that would be a big plus for Apple. The question is, I don't know, I listened to Bloomberg last night, and they talked about it a great deal. But I don't think there's any real belief that that's imminent. And it may take another couple of weeks before the Chinese Communist government actually rolls out any plans for China and their zero lockdown policies. But that would be one of the things that could change the trajectory on Apple, both for production and that. Now, Apple, to its credit, a couple of years ago started moving a great deal of the production out of China and to India, some to Mexico, but certainly only about half the production line is still in China. So if anything really bad happens, not as problematic as it's been before, but half is not none. And it's really, you came down on a huge amount of volume, which is generally not bullish. So you've got to watch that this does not jump the creek below 134.15, that October 13th low. That, of course, could put a pall on every one of the major indexes because Apple, it's like the Borg. Resistance is futile. Little Star Wars, not Star Wars, Star Trek reference there. I probably almost got some Star Wars and Star Trek fanboys upset there. Okay, question from Ron on the XME. I don't see anything other than you've got basically a lower high, a higher low on September 26, a lower high on October 26, and you're just coming in here and flattening out. If you get over 50.37, there may be an opportunity, but this just kind of looks like a giant triangle to me. In fact, let's do this and bring it up here. I'd want to wait. Do you have enough time? We'll do this when we come back. This just looks like a giant triangle, and I'd wait for it to break out. We'll draw some lines on this when we return.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
And we're back. Why is this, why do I have a message here? I don't know. Okay. Looking in Tigers Den, I don't see much. Okay. Not exactly sure what's going on. Oh, that's in Skype. Let's see. Don't see anything there. I don't know why. Okay, I'll take a look. Anyway, we were talking when we left about the pattern, the XME. You're right at the line where it needs to break out in the metals and mining, not to be confused with the yellow metal, gold, which is up $1.90, a little lower this morning. Anyway, you generally want to fade when they get this far along into a triangle. If it breaks out, you want to short it. And if it breaks out at the bottom, you probably want to go long. Just the opposite, about 80% of the time. That you're up today with very light volume into that downtrend line probably tells you something. Okay, we've got a caller. I just heard somebody. Go ahead, caller.
Good afternoon, David White. It's John from Philly.
Hey, John from Philly. The other John from Philly.
Yes, indeed. And hello to John from Philly number one. Excellent.
Okay. What do you want to talk about today?
Yes. David, I wanted to call in and ask you about money flow fundamentals into the stock markets. Over the past days, weeks, and months, you periodically refer to conversations and conclusions you've come to after commiserating, consulting with contacts, people in your network who are very intimately involved with the bond market, the foreign exchange markets. After looking at the developments the past 2, 3, 4 months, and noticing how the long bond, the U.S. Treasury long bond, continues to move lower, and that's, of course, most easily represented by looking at the TLT ETF. By seeing that continue to move lower and lower, clearly shows supply overwhelming demand. That much is clear. That's simple. At the same time, we've seen money flow into, say, the DIA, which is a Dow Jones ETF, into energy stocks as represented by the XLE and XOP ETFs. Money flow into industrial names like Caterpillar, Emerson, Ingersoll Rand, Honeywell, as represented by the ticker symbol XLI, that ETF. We've also seen money flow into pharmaceutical names and healthcare or health insurers, as measured by XLV, and we can also see money flowing into the banks, the XLF. My question to you, David, after just sharing all those mere observations, and of course that's just historical, can you envision, or you can giving consideration to the idea that large institutional money, both domestic and foreign, is in the process of making a large asset allocation switch out of sovereign debt instruments and into U.S. stocks, with the exception of tech and software stocks in the U.S.? Is that something you're considering? I'd just like to hear you speak to that question, if I could ask you to do that, please.
Okay, I think earlier we were talking about, in the den, maybe it was before lunch or something, about money managers or cash managers having to be in the ball game all the time. And there is some of that. They've got cash, and unless someone pulls that cash out, they've got to be invested. They're not allowed to sit around and second guess the market. The idea is that they have to be in something. And then the money managers will hedge whatever they're in. So the general idea in bad markets is they've got to be invested. And someone's allocated whatever it is, 30% or 50% of their portfolio to equities. So I don't know if there's so much money coming in as the money coming out of tech areas has now been put into what they think are the safest stocks and that will lose the least amount of money. Does that make sense?
Oh, of course, yes, absolutely.
So I think it's nothing now but safety trades on trades for a lot of these folks that they know are going lower. They just think that these are going to go less low than maybe some of the more volatile stocks, that growth stocks. So I don't know if there's that much more money coming in. I think it's just being concentrated, especially in the Dow. And you see it first there because 95% of all the shares in Dow stocks are institutionally owned. It's very hard to go out and buy any new shares. That is one of the things that DIST is so massively owned. So if you go start getting into it, that's where you see some rather large moves. There just aren't that many shares floating around that are tradable and buyable. So that's why I think we've seen so much in the Dow and the, let's say the S&P 100, the top 100 stocks in that. People are still in it, but I think they're just fleeing to safety. Unfortunately, I'm thinking probably the first quarter of next year, it'll be out of the frying pan and into the fire. But I think we've got a little bit of time before that happens.
Excellent. David, I'm going to leave your comment at that, and I thank you. And if I see or continue to see money flowing into the Dow names and those sectors that I mentioned, perhaps I'll give you a holler again. But for the time being, I appreciate your thoughts. We'll go from here.
As they say on Wall Street, it tends to be a lot of rearranging the deck chairs on the Titanic.
Yes,
it's just all indeed at the stern now.
Thanks again, David.
You bet. Okay, we got just about 30 seconds left, so let's check in the markets here. 3806, which is up 36 points. I didn't think the market really had it in it, getting involved. Maybe you get a pullback tomorrow. I didn't see anything that really did that. Maybe a lot of people got short this morning and are getting squeezed out here as we go later into the day. I'm not a big fan of being short either until maybe Wednesday, or even being long until Wednesday. Too many silly things can happen. But, that's kind of it. Anyway, we'll wrap up the end of the show when we return.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we return, pretty much hanging just over the 3,800 area on the S&P cash, up 36 points at 3806. And I'd probably be a lot more fulfilled if we had a lot more volume, but certainly nothing like we saw on Friday. We got about 7.2 billion shares going in, with an hour and 6 minutes left to go. So today will be a light volume pop after a fairly heavy volume day of about 14 billion shares on Friday. So this is a light volume follow-up to Friday's business. As I said, I suspect we're getting all wound up, and we're probably going to see something of very wide-ranging up and down bars, I think, on Wednesday. And that's probably going to set up trading probably to the end of the year. We've got the bond market closed on Friday. We've got CPI numbers coming out. So I think there's more than a little bit of room for some hijinks. And maybe we see a lot of trading action before the end of the week. But I think it really starts on Wednesday with the delta neutral as we go into options expiration for the 18th. But, don't always have to be in the market. I didn't see much of anything going on. Didn't see really much of today's action. Wouldn't be surprised if either by the close or by noon tomorrow we're back to pretty much unchanged on Friday's close, somewhere around on the SPYs of about 377. Maybe you just get too many people on one side and they're going to run them out, and then on the other for them. That's about it. Hang on for Tom O'Brien. He'll wrap up the rest of the day. I'm sure a lot of people want to hear about gold. Up $2. But better than the lows this morning. So when you can, not when you have to. We'll see you here tomorrow, bright and shiny.
Building wealth trading in the stock market seems impossible to